Sometimes the biggest revolutions in finance don't start with new currency. They start with a new way to move existing value. The buzzword dominating boardrooms, banks, and blockchain conversations. Today is tokenization, and XRP is quickly becoming the quiet contender, poised to lead it all. I'm Kevin, and today we're going to explore whether XRP could dominate tokenization in 2026, how it's already shaping real-world asset markets, and why institutions are quietly preparing for what might be the next trillion-dollar wave. Tokenization supply means taking real-world assets like real estate, stocks, bonds, invoices, or even artwork and representing them digitally on a blockchain. Each token stands for a share of ownership, instantly transferable, fully traceable, and secure. Think it this way. Today you sell a property or transfer a company's shares. It takes days of paperwork and third-party approvals. Tokenization compressed all that into seconds. By 2026, analysts at Citibank project that tokenization assets could reach over 5 trillion in value. That's not speculation, it's traditional finance moving onto the blockchain's rails. So why does XRP matter? Because tokenization isn't just about creating tokens, it's about how you move them. And no one moves value faster, cheaper, or more reliable across borders than XRP. XRP's architecture was designed for day one to handle institutional level settlements. It's fast, 3 to 5 seconds per transaction. It's affordable, fractions of a cent per transfer. And more importantly, it's built on compliance. That's why banks, corporations trust it for payments today, and soon they'll use the same rails for tokenization assets. Imagine a world where a company's corporate bond lives on an XRP ledger. Investors could buy, trade, and settle instantly with full transparency and no middlemen. Real estate developers, tokenization portfolios, buyers from anywhere in the world could own fractions of commercial buildings, settling instantly through XRP bridges. This is what tokenization does. It enhances liquidity, reduces cost, and XRP ecosystem already provides the infrastructure to make it happen. The year 2025 changed everything for Ripple and XRP. After years of uncertainty, legal clarity arrived. XRP gained recognition as a compliant digital asset for cross-border use, and that opened the doors to global institutions. Now with the clarity, banks and assessed managements are exploring how XRP's ledger can power the next generation of financial product. This isn't just about crypto anymore. It's about financial modernization. When major financial players like BlackRock, Citi, and JP Morgan talk about tokenization as the next wave, it's not a matter of if, it's how fast. X advantage is speed, interoperability, and regulation readiness. Part 4. Real-world examples already in motion. Ripple's technology is already being tested beyond payments. Partnership with MasterCard, WebBank, and Gemini have shown how stable coins and digital dollars can ride on the XRP ledger for instant global transactions. At the same time, companies like paving are holding XRP as part of their corporate treasury, signaling confidence in the future utility. Now add tokenization into the mix. A logistics company could tokenize invoices and use XRP to settle receivables in real time. A film studio could tokenize royalties. A small business tokenizes equity and raise the funds globally without traditional intermediaries. Every one of these examples shows XRP doing what it does best, bridging value seamlessly across borders, across systems, across asset classes. The race of 2026. Make no mistake, XRP isn't the only player in this race. Ethereum, Polygon, Stellar, and Avalanche are all exploring tokenization platforms. But here's the difference. XRP isn't trying to reinvent finance, it's connecting it. While others chase flashy DeFi or retail trading, Ripple is aligned with banks, central banks, and regulators, the pillars of the global economy. This alignment is what will likely position XRP as the dominant bridge when trillions in tokenization assets need a trusted, efficient path between systems. By 2026, as financial institutions tokenize bonds, mutual funds, and even commodities, they'll need rails that can move value zero friction, and that's exactly why XRP shines. Tokenization will make markets more liquidity and accessible, but it will also demand trust. Trust that the infrastructure behind it works. RippleNet and the Interledger protocol already connects payment systems that couldn't communicate before. These same technologies will soon connect tokenization assets, currencies, and stable coins. In developing regions, this technology could finally unlock financial inclusion, letting small businesses raise capital globally and instantly and securely. In major markets, it could shorten settlement times for trillions in trade, saving institutions billions every year. It's not about replacing traditional finance, it's about upgrading it. If you want to know whether XRP will dominate tokenization by 2026, here's the key follow-up: adoption, not hype. Watch why institutions are building on XRP. Track the corridors being opened. Notice where liquidity is flowing, and you won't see it on the news every day, but you'll feel the effects in fast settlements, lower costs, and smoother transactions. By the time most people realize it, XRP will already be the bridge underneath it all. So will XRP dominate tokenization by 2026? If the last decade has taught us anything, it's that real revolutions happen quietly, then suddenly. XRP is not chasing attention, it's building infrastructure. And that's where long-term success is always found. I'm Kevin, and if this video helped you see how XRP is leading the tokenization wave, hit like, subscribe, and leave a comment below. I'd love to hear what you think. XRP really become the bridge for the 5 trillion tokenized future. Let's keep the conversation going right here. And thanks for watching.